Welcome to video 3. So, what is possible? The so-called Holy Grail I'm going to talk to you about actually has two parts. I'm going to make a statement at the end of this video that will make you rich if you grasp and then use it. But first, let's look at an actual experiment that I did with a Georgia State quarter. I flipped it 100 times, picking tails for the losing trades and heads for winners. I intentionally chose tails as the loser because it's well known that tails is more likely to come up than heads. It comes up more often. The actual results were 45 heads, 55 tails. Now that's only 45 winners and 55 losers. A terrible trading record that I'm sure even financial astrology could beat. Hey, I hope I'm not offending anybody with my comments, but come on. Financial astrology? Anyway, I put the results into an Excel spreadsheet that you're welcome to have for free. In order to get it, just send a blank email to Kurt, that's K-U-R-T, yes, I spelled it correctly, K-U-R-T at mail, M-A-I-L, websitewizard.com with Grail in the subject line. And I'll send you the spreadsheet as an attachment. So, what if we use a system that focuses less on timing our entries and exits, less on picking the right kind of stock? I still do use a system to pick a stock. I don't have monkeys throwing darts at a board. But what if we had something that focused less on that and more on controlling the profit and loss parameters? Here are the surprising results of what can happen with a trading record of 45 wins and 55 losses. Okay, let's take a look at this. This is the Excel spreadsheet that I put together, actually documenting. If you look here, we have heads. I had one win, and then one loss, and one win, then a losing streak, 3 losses in a row, and so on and so forth. This continues all the way down. If you want a free copy, I can send it to you. But let's take a look here. Before, with our Holy Grail trading system, no, our system that picked the 75% winners, we had like a 25% loss, and we had 10% wins. And look at what would happen if your trading record was not as good as 75% wins. You'd end up with 7 cents. So let's try and make it even money, okay? Let's have a loss limit of 10% and a win goal of 10%. Well, you can see that we lost over 80% of our account with that kind of parameters. Now over here we have a loss limit. Let's see what happens if we, well, let's increase the win goal. Yeah, if we make 12% for every time or so that we lose 10, that ought to do the trick, right? No, we cut our account still more than in half. But let's stick with that 10% win and cut the losses and see what happens. We quadrupled our money. Now, on my site, I show a special method to absolutely mitigate loss, to absolutely set your loss at the beginning to know what your maximum loss could be. And for example, with a recent trade, I set the maximum loss at 4%. That trade ended up bringing in 15% in 4 months. And if you had 100 trades like that, look what would happen to your account then. Now, I know what you may be thinking. After this example with the Excel spreadsheet, boy, that's nice in theory, Kurt, but how do you guarantee that, that bottom side loss? How do you guarantee that you get out of a trade with only a 5% loss if it's tanking? Well, there is a way to guarantee a limit on how much you can lose, while at the same time leaving the upside growth potential totally open. That's right, we're talking limited risk with unlimited upside potential growth for your stock. In video 4, I'll show the exact method I use along with several actual trades I've closed in front of everybody using the system. Now, here's the incredibly wise saying I said I'd give you at the beginning of this video. It's incredibly wise because, you know, I said it. But here's the saying. To become rich, stop picking stocks and timing trades. Instead, pick stops and trade your time. Now, before I tell you what the method is on video 4, I'm going to tell you what it isn't. The way to limit losses and leave the upside open is not the so-called trailing stop loss. If you don't know what a trailing stop loss is, maybe you could Google that or go to Wikipedia or Investopedia for the detailed explanation. If you do know what a trailing stop loss is, you probably know that it's easy to get burned with these. If you set your stop too tight, you get stopped out at the price that you don't want, and then your stock goes up from there, but you're not in it. Likewise, you can get stopped out and lose more than half of your investment, because a stop loss is only a market order that's triggered when your stock trades beneath that price. If your stock cuts in half overnight, you're out 50% because of your trailing stop loss order. It's not a good way to go. Let's look on video 4. I'll show you the way to absolutely control your exit, insure your capital against devastating loss, and yet leave your upside completely open. It's about positioning.